and you're punished if you do not participate. So it will have a very dramatic consequence for the investor.
Welcome back. Today we are going to talk about 3 proven ways to get the investor to invest more. And we have Kat here with us today to answer these questions. And this is so exciting. I mean, if you're a business owner and we're wondering about these kinds of things, we are here for you. Stick around because this episode is going to be so powerful. So let's start.
Okay, so ways to get an investor that is going to invest or that has already invested to invest more.
Yes.
And then we're talking about more as in participating in future funding rounds.
Okay.
Yeah. And there are 3 basic ways. And those are, number 1, pay to play. That's probably the most famous one that you will hear about. Pay to play.
I never heard about it, so I will learn from this.
Sounds kind of dramatic, right?
Yes.
It is. Because what you do is you condition the first investment with the investor investing in the next funding round, typically taking his pro rata as in proportionate the same amount that he took the first time round. And you say that if you do not participate in the next funding round, you do not get to play. We will remove economic rights from you. Typically, it means that the preference shares that the investor holds will be converted into common stock.
Okay.
So it will have a very dramatic consequence for the investor.
So you got to get in the game from the beginning.
And you have to promise to stay in the game in order to have the economic rights that you got from the first funding round.
Okay. It sounds like a big promise.
It's a very big promise.
Yes.
And basically, there are 2 situations where this can become relevant. One is when you have a very attractive company. If you're negotiating with several venture capital firms and you want to make sure that the one you go for will put their money where their mouth is and also stay committed with the company long term, then you can ask them to commit through a pay-to-play. Or it can be in a downturn where the company is struggling and the current investors are negotiating amongst themselves, and some of them want to participate and support the company further, and some don't. Then you can kind of push it and force a pay-to-play. So you're rewarded and you're punished if you do not participate.
Okay. This
That's
sounds
number 1.
number 1. Very good. And if we're heading up to number 2, what is that?
Well, number 1, pay-to-play. That's a stick.
Yeah.
Now we'll have a carrot.
Ah.
And that's a pull-up.
A pull-up.
Yeah.
Is it as it sounds?
Yes.
Okay.
So the first one, we degraded the shares, moved them to a worse class.
Yeah.
And in this case, we'll instead pull them up so that the preference shares will get a better share class, a better type of preference shares.
Okay.
So you will be preferred, you will be pulled up. So it's a carrot. So if you continue to participate, you'll get better economic rights.
Oh, so it's a good way to motivate your investors.
Yeah.
Perfect. And that was pull-up.
Yeah.
Okay, so the third one,
Yeah.
what is that?
And first I'm going to add also that there can be other negative or positive economic consequences. But the typical one will be regarding the preference shares.
Regarding can it be anything else? I mean,
it
if you have an
can be
example.
that you lose your anti-dilution protection.
Ah, okay.
Something like that. So it can be many variations of punishment or a carrot.
Okay. Pull up.
Yeah.
So we're heading out to the third one, which is the...
That's governance, control rights. So as of today up to now, we've talked about economic rights. Now we're looking at control rights. You can say that only if you keep at least 10% ownership will you have a right to a board position. Only if you take your pro rata in the next funding round will you be entitled to vote and have reserved matters as part of that constellation that has a right to reserve matters. Or it can be something else. like a exit trigger, because most companies that go through the venture capital journey, they will have some kind of clause in the shareholders agreement that says that if you have not started a proper exit process, that means selling the company, doing an IPO within 6 years, the major investors can trigger it by mandating that you engage an investment bank and start looking to exit. And that you might have that right, but if you do not participate in the future funding rounds, you might lose that right.
Okay, so and that was called the
Well, actually, just control rights.
Control rights.
Different types of control rights, and they can be positive, gaining something if you stay committed, or losing something, which might be the most typical.
Okay, but if you look at all these three, the first one was the
Pay to play.
the pay to play, and then the pull up, and then these rights.
Control rights, yes.
What is the most common way? I mean, what do you see?
I would say the most common is pay to play. That's
Pay
the
to
most
play.
famous one.
Yeah.
But it's very aggressive also.
Yeah.
The governance rights, they might be a bit easier to negotiate, saying that everybody that has at least 10% has a right to XYZ, or that the 3 biggest shareholders will together have a right to vote in the reserved matters, and 2 out of 3 will have to say yes. And implicitly, that means that if you do not take your pro rata, you might be pushed down. So you will lose your control rights.
Yes.
So that's a bit more nuanced, I would say.
But this sounds like if you take in an investor, it's like pressuring them a little bit.
Indeed.
So, I mean, if you get this, if you invest this, you can also get this. But then you have, as the business owner, you might have some more control over the situation.
Absolutely. So this is not typical in all scenarios. You need to either have a really strong bargaining position where the investor is stating that they want to stay committed, or like I said, it can also be when the company is struggling and it's rather the investors pushing and pulling amongst themselves. That if I commit more and take more of a risk, I want to be promoted.
Wow. This sounds amazing. I mean, it's very informative. I never heard about the pull-up and the pay-to-play. So, I mean, if you're a business owner and you're planning on to get in investors in your company, you have 3 really good negotiation tips here.
Yeah.
And we're so happy to share that with you. That's why we are here.
Sure. And also, if you're an investor and you get asked for a pay-to-play, watch out.
Watch out. But you can also ask us about these questions, even though if you're an investor. So happy to share, and welcome back.
So good. So good. Energy.
Yes.
I really like that.
I mean, it must be the trees.
It must be.